The pandemic is having a lasting impact on our society and on our spending habits. I've covered this in depth over the past year with stay at home economy stocks, the return of precious metals and rare earths, electric vehicles, cannabis, contactless payments, video games, and a whole lot more. But I've also been preparing investors for the post pandemic world as well. And today, we're going to delve into one trend that both consumers and retailers are applauding. Hi, I'm Matthew Carr, Chief Trend Strategist at the Oxford Club. If you're new here, be sure to hit that subscribe button and turn on notifications so you don't miss my best trading ideas, which I share here each and every week. I'm always amazed at how much can change in a year, particularly a year like 2020. Well, one of the trends that couldn't survive the pandemic is that fashion frenemy, skinny jeans. Now, you either love them or hate them, right? The style choice has even been a point of contention between, millennials and Gen Z on TikTok. But even though skinny jeans have been the driving force behind denim, particularly for women, for 15 years, it was just simply no match for the pandemic. During the past year, with people trapped at home and donning more relaxed clothes, if clothes at all, the consensus emerged that the fashion fad had run its course. The post-pandemic world is now all about comfort, and this means a new denim cycle has begun. This is great news for consumers and for retailers. Now, the most noticeable change is the return of loose-fitting, baggier jeans. Now, I've been calling for 90s fashion to make a comeback, though hopefully we never have to live through the soggy cuffs of JNCOs again. But for investors, though, this denim trend has actual real profit potential. Spending on clothing and footwear actually plummeted. And in fact, if we go back to March 2020, apparel sales were down 50% year over year. And in April, it was even worse as they tumbled, 86.4%. That was a very bad year for the entire retail sector. Now, later in the year, we did see a recovery, but many retailers still saw 2020 revenue drop double digits. That means a new denim cycle, a new reason for consumers to stop neglecting their closets and start spending is earning signs of relief from a wide range of apparel companies and retailers. But this style change is one Levi Strauss & Company, ticker symbol LEVI, is already prepared for and profiting from. In the company's first quarter, sales slipped 13% year over year to $1.306 billion. This decline was solely due to the pandemic. That gets all the blame. It reduced traffic to Levi's company-owned stores as well as third-party retailers. And in turn, the blue jeans maker saw a 26% drop in direct-to-consumer sales. But there were bright spots. Company-operated e-commerce grew 25%, partially offsetting that direct-to-consumer drop. And global digital net revenue, which includes Levi's e-commerce sites and online wholesale business, increased 41%. But here's the real big takeaway. Levi's reported 40% of its women's business sales in the quarter were for a looser fit, and sales of baggier, relaxed men's jeans surged 50%. So all of this meant the company's start to 2021 was better than anticipated, both in terms of internal and Wall Street expectations. And it's only going to get better as we enter this new denim cycle. So for the second quarter, expectations are for Levi's revenue to jump 145.9% to $1.19 billion as earnings swing from a loss of 48 cents a year ago to a profit of 7 cents. Then in the third quarter, the forecast is for $1.42 billion in revenue, with EPS jumping 337.5% to 35 cents. So these are big turnarounds that we're seeing for this blue jean maker. For 2021, revenue is forecast to come in at $5.52 billion, a 24.1% increase over 2020. And earnings are projected to rocket more than 433% to $1.12. What's remarkable in all of this is that Levi's actually toyed with discontinuing its men's relaxed fit styles in recent years due to their underperformance. But today, they're enjoying this great resurgence and they're helping the company move forward. Now, skinny jeans aren't completely dead, at least not yet. NPD Group reports that this segment still accounts for 34% of the $7.1 billion women's jeans market here in the United States, right? That's still the largest piece of the pie for now. But skinny jeans have seen a decline in market share of 7% in the last 12 months, which ended back in February, that's where that data is coming from. So that's a significant pullback, and this is a significant change that we're seeing in the retail landscape. Now, apparel has demonstrated some real strength in recent quarters, and we're entering a stretch where the year-over-year comparisons are very favorable, like I showed you with Levi's, right? That should add a little extra oomph to shares, and this new denim cycle bodes well for Levi's itself. Well, I'm Matthew Carr, Chief Trend Strategist at the Oxford Club. Thank you for watching this episode of Market Trends. For more information like this, be sure to go down to the description and sign up for my free e-letter. Until next time, here's to high returns.